In this video, I'm going to show you how to enter into a longer-term option trade using weekly or near-term options. It's one of my favorite option trade entry strategies that has limited risk and big profit potential. Too often, traders think that they've got to enter just at the market price for the current day, when in actuality, there's a much better way to do it. What if I told you we could take a 50-50 shot, and if the coin flip doesn't go our way, then we get a do-over? In this video, I'm going to show you one of my favorite option trade entry strategies that has limited risk and big profit potential, as well as how to place this option trade, showing a real example on the option trading platform. Hey guys, Darren here. We have a great strategy for you here today. I promise we're going to dive into many detailed tips and tricks, so if you haven't subscribed, please do so now. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. What is a trade entry strategy that can produce quick profits with limited risk? Guys, we're talking about using near-term options to enter a longer-term option trade. What is a near-term or weekly option? By weekly, does it mean not strong, but weak? No. So let's start with explaining what weekly options are versus regular options. Now, if you're ready, go ahead and hit that like button. Go to your Tastytrade account or whichever platform you're using. By the way, Tastytrade is one of the best and most intuitive for trading options. I'll put a link down below. Right now, you can get up to $3,000 when you fund an account. Open up your app and let's go to a company we all know and love by punching in coin on the trade tab. Now, the option chains with the W by them are weekly options. You can see the number of days to expiration in the center. Now, the weekly options are not as heavily traded as the regular options, so the higher volume of the regular options means they're more liquid. Therefore, we give up less in the difference between the bid and the ask spread. Normally, the sweet spot is closest to 45 days to expiration. However, we're going to open up the 9-day June 16 chain. This is technically not a weekly option. It is a regular option. However, at 9 days to expiration, I'm normally rolling or closing. So I'm only going to go a little over a week out for this trade. I'm going to take a shot on this one. We click on the bid to sell the 48 put and the ask to buy the 43 put. We then scroll down and sell the call vertical. This makes the trade an iron condor. We just did a video explaining the iron condor in detail last week, so I'll link to that down below if you missed it. If you are new to trading, it explains the iron condor in detailed, simple terms. After selling the put vertical credit spread, we click on the bid to sell the 59 and the ask to buy the 64 call options. This is now the call credit spread that we are selling. Switch to the curve mode and we see that we're going to collect $2.01 up front upon placing this trade. As long as the stock stays above the 48 and below the 59 strike prices, we keep the entire $2.01. Our max loss is $2.99 since we are $5 wide and collecting the 201. Remember, there's 100 shares of stock that are controlled by one option contract, so it's $201. You just subtract the credit from the width of the spreads in order to get the max loss of the $2.99. So it would be a quick $200 profit. The best thing is this is all going to happen in just 9 days. You can see from the chart that at times, coin normally trades in a fairly tight range. We just had a big drop since there was a crypto regulatory news and a lawsuit. I do really respect the CEO, Brian Armstrong of Coinbase, and it does seem to me that he has just been looking for regulatory approval from the SEC and clarification, and now they're going after him. This is related to Bitcoin and crypto, so you never know what the government's going to do, or what some companies in this space will do as well. So that's why I'm using defined risk and trading an iron condor so that I can't get hurt too big or too bad. I do believe that in the next 9 days, it could stay within this range. I can click on the far right and open up the trade chains that show the $786 in profit that I've made in trading coin over just the last 60 days. Not too bad if I do say so myself. Now, the whole purpose of this video is to show a way to make a quick profit and take a shot or get a do-over. Now, there'll be a follow-up video to this video that shows how we're going to manage this trade and what happened. This could be a disaster. Since we only have 9 days to expiration, if I get a quick profit, I'm likely going to close out and bank the winner. If it breaks outside of the green profit range, I'll just roll and readjust my strikes to the new range in the next regular option chain. So it would be that July 21st option chain. That's currently at 44 days to expiration. I should be able to center the trade again and collect more premium when I roll. So either we win now or we win later. All right, guys, if you're a beginner and this sounded a little bit confusing, don't worry. It did for me as well at first when I started. All right, we'll be covering many more detailed tips and tricks, and we'll learn together in future videos. All right, I've put a link down below for the free options workshop. Be sure and grab that. Also, be sure and leave a comment down below. Let me know what you're trading today, what you'd like to see in future videos, and share the video with a friend. All right, thanks for watching, and see you in the next one.